Happy Thursday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Thursday, September 21st, 2023. Happy fall, y'all. We'll start with today's key macro event, which is bonds are toast if the Fed is wrong on its productivity miracle bet. So the Fed's fresh higher for longer signaling was both higher and longer than markets anticipated. They raised their 2024 and 2025 median Fed funds rate estimate plus 50 basis points apiece. And they kept their projections for the longer run estimate were well above neutral, well into 2026 in terms of the dot plot. Yesterday's market response, stocks down, cyclical underperformance, bonds up, dollar up, was interesting in that it priced in deflation, which is growth and inflation slowing simultaneously in our grid regime process. This is asset markets reducing the probability of the soft landing that Powell reiterated is still the Fed's goal. Was yesterday the beginning of the end of the bond bear market? Probably not. Today's market response, which is stocks down, cyclical outperformance, bonds down, and dollar up, is pricing in inflation, which is growth slowing and inflation accelerating. That is an early indication that we are likely to be proven prescient on two of our qualitative research views, which is number one, the BOJ is set to inject fresh volatility into global sovereign debt markets via further policy tightening this fall, potentially as soon as tomorrow. And number two, the transition from immaculate disinflation to sticky inflation here in the US will catalyze a further bear steepening in the Treasury curve. As always, these are excerpts from our leadoff morning note. Subscribe to get the full note and obviously the market implications as it relates to what you should be doing in your or your clients' portfolios. Transitioning to our daily rundown of cross-asset performance. We'll start with S&P sectors here. So the S&PY is down 3.5% week over week in the wake of this Fed news. It's being led to the downside by consumer discretionary, which has been a darling this year, minus 6.1%. You got consumer tech lagging as well, and you also have basic materials lagging as well. So three of the more cyclical sectors in the market are definitely taking on the chin. Again, this is the market reducing the probability of a soft landing. Shifting gears to factor performance here. We got S&P, as I mentioned, down 3.4%. That's being led to the downside by high beta and by growth. So high beta growth is really taking on the chin. This is the market unwinding expectations that firms like NVIDIA, et cetera, can deliver earnings growth in a recession scenario. So the probability of a hard landing is going up, probability of soft landing is going down. So investors are basically saying we can't maintain those types of positions at the margins, obviously. And then lastly, with respect to geographic equity performance, so we got the SPY down 3.5%. We got Brazil down 3.2% week over week. China down 3.7% week over week. So emerging markets are really taking on the chin here as it relates to this renewed bout of dollar currency and fixed income volatility. With shifting gears to the fixed income market, the Barclays Ag is down 1% week over week, being led to the downside by TLT. Can't get this instrument can't get out of its own way, in so much that economists can't get out of their own way, especially those at the Federal Reserve. And not trying to be disparaging, but it's shocking to me that 100+ PhD economists miss the resilient U.S. economy thing. And it's the reason it's not shocking because I don't care about their forecast. What I care about is their ability to nowcast the economy and adjust their expectations sooner and on the fly. And it very clearly did not do that, and it's causing a lot of market volatility this year in the fixed income market in particular, because all of Wall Street came into the year with the expectation that we would have seen a recession by now, with the exception of 42 macro. Currency performance. That is, the dollar is up a little bit here, week over week, up small 0.2%, but we continue to see the British pound take it on the chin here, down 1.1%. We also have the Swiss franc here taking on the chin, down 1% week over week, particularly today in the context of the Swiss National Bank holding pat on policy rates and signaling dovish with their commentary. And then commodity performance. We're now starting to see a little bit of a reprieve in that commodity move that we're seeing. The commodities, DBC is down 0.9%. That's the broader commodity index. It's being led to the downside by base metals here. And you also have uranium, which had been yesterday it was up 4% week over week. Now it's down 1.2% week over week. And then lastly, crypto, we're now starting to give some gains back in crypto as well. So Bitcoin's down 0.4% week over week. Crypto is being led to the downside by Ethereum here, down 3%. And then we also have XBI, Binance Coin, down 2%. And then lastly, transitioning to my Longbow dashboard to give you an indication of the trading range setup for today in terms of what you should be doing from an actionable standpoint today. We got an oversold signal in the S&P 500 here, violating the lower boundary of the trading range. So this is definitely a good spot to be covering shorts if you've been short. If you're thinking about putting on some long trades here, this would be a good spot to be buying the dip in the U.S. equity market. You got the VIX overbought here as well. So that's a great setup to be, again, covering shorts and getting long at the margins, increasing your net exposure, increasing your gross exposure to the market, to the equity market. Ethereum is just, it's well beyond the lower boundary of its probable range here. So that's definitely something to be aware of. Ethereum's very grossly oversold. Yep. And so that's it. We'll wrap it up there. Darius Dale presenting our macro minute for Thursday, September 21st, 2023. For those of you who are cared inclined to tune in, I'll be hosting the Real Vision Daily Briefing today at 4 p.m. Eastern. So looking forward to that conversation with our friends over at Real Vision. So definitely come in and tune in and join us for that. We'll see you back here tomorrow. Everyone have a great day. Cheers.